Hi there, good morning. You're watching Chartbusters. I'm Mangla Malu. With me is Nigel D'Souza. As always, this is a show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on these stocks. Before we kickstart the show, a quick look at the markets. Well, we're holding on in the green as far as the open is concerned. We opened well and now managing to hold above the 11,600 mark. So bulls would take heart from that. However, remember, tomorrow is the expiry. The maximum open interest is placed at the 11,500 put at the lower level and 11,700 calls. So 11,600 thereabouts, remember, is where the smart money is chasing. 11,550 is the level from where we've seen a fair bit of recovery over the last couple of trading sessions. Hi, Nigel.
Hi, Manglam. Well, a couple of stocks though that are moving. Coal India, after a while, that stock is moving. It's now moved to nearly around 260 odd. I'll be interested to see how exactly the April 2019 dispatches work out, because in the last 1 month, actually, the stock has moved very well from around that 230, 235 odd mark. We'll talk about that and more. First up, let's run you through all the top stories. ACC loses out in trade on the back of a disappointing first quarter. The sales volumes come in line at around 7.5 million tons. The margins, though, at around 13.5%, miss expectations.
ONGC gains about 5% this week itself as oil hits 2019 highs. Brent crude is still hovering around that $74 per barrel mark. Remember, ONGC is an upstream company.
And there's some negative news coming in from Lupin as the Pithampur Unit 2 becomes the company's third facility in 2019 to get official action indicated status. The unit has been under warning letter since November 2017.
Indiabulls Real Estate surges despite weak earnings. Reports suggest that the Indiabulls Group has listed out Blackstone and Godrej Properties to offload stake in their real estate business.
And another stocks in news. Coromandel trades higher on the back of good numbers led by both the nutrient and the allied as well as the crop protection segment. Tata Global, though, was under some pressure post some mixed fourth quarter numbers. The company acquires the branded business of Dunseri. The stock, in fact, rises nearly around 20% out. Well, the market's holding mildly in the green as we speak. The Indian rupee, though, that's weakened a tad bit, so keep an eye out on that mark. Remember, we have been tracking the crude oil prices. That's moved to around $74.5 per barrel. But the good part was that the rupee was showing some strength. Now the rupee, is showing some weakness. It's moving towards that 70-odd mark. Overnight, the dollar index, actually, to be fair, that had moved to around 97.7. So some strength on the dollar, and that's, reflected in other currencies, and the rupee as well is showing some weakness. How do you trade the Nifty from here, though? Ashwani Gujral joins in to give us his strategy on the Nifty as well as the Nifty Bank. Ashwani, go ahead. Tell us, how would you trade it?
See, basically, yesterday afternoon, we had a big fall. And today, all day we've tried to break 11,590, 600, and we have failed. In fact, the market keeps on finding support there. So my guess is that we are likely to see short covering. It's a good time to get your shorts covered both on Nifty as well as Bank Nifty. So the idea is that after 3 to 4 days of burst of fall, you should be expecting some kind of upside. Having said that, individual stocks, BPCL is a buy with a stop of 340, target of 365. IndusInd Bank is a buy with a stop of 1660, target of 1710. And HCL Tech is a buy with a stop of 1090, target of 1150. I like to look at key stocks and what's going on there. I think ICICI Bank is just about hit highs of the day. So the idea is that even large stocks like Reliance and Techs, they're all coming back. So the odds of short covering are fairly high.
All right, fair point there, Ashwani. Just hang in there. There is some news coming in on Hotel Leela. The SEBI has asked the company not to go ahead with the sale of units until further orders. Remember, the company had gotten into a deal with Brookfield to sell all their units. So we'll keep an eye out on how this pans out. ITC was in the fray as well to look at those properties. So maybe this will take longer than what the street was expecting. In fact, also pull up something like a JM Financial, because most of Hotel Leela's assets and debt are owned by JM Financial ARC. So that stock should be the one which should not do well if this takes more time. And understandably, it is under a bit of pressure, not too much. Volumes are usually very low on JM Financials. But after this news, the impact would be more on JM Financials than Hotel Leela itself. Ashwani, your word on a couple of these stocks. Tata Global Beverages, that one should come up for you. Seeing a very, very sharp knock now, down about 5.5% from the highs. And along with that, we have the other Tata Group companies as well. Tata Motors, Main and the DVR, both of them lower by about 5-6%. What are they chartically suggesting? There's more to go?
See, Tata Global had a very strong support at 170. So as long as it's 170, 180 holds on, there is still hope on Tata Global. I think as far as Tata Motor is concerned, it's going through a bit of a correction, maybe 10-15% odds, and then it should turn and head back from where it's come.
All right, fair point there, Ashwani. Thanks a lot for joining in. Your disclosures would be up for our viewers on the screen. We'll keep coming back to you through the course of the day. But with that, we should focus to the cement space now. ACC and Ultratech, they're the stocks on our radar. ACC is sulking on account of weak numbers, Nigel. And Ultratech, what is expected? First, you start with ACC. That's not doing too well.
Well, both these two stocks, Mangalam, they have run nearly around 20 to 25% in the last couple of months. So the expectations are high. Let's start off with ACC. Those numbers were a bit of a miss. Top line was more or less in line with what we were working with. The volume number was bang in line at around 7.5 million tons. The problem was that the margins, that missed by close to around 100-120 basis points. We were expecting it to expand. That wasn't the case. What supported the top line then? One was that the RMC business, that grew by close to around 19%. The second factor is that the premium sale products, that as well was higher. If you're selling more amount of premium sale products, then obviously the realization should come in much higher, but wasn't as high as the street was working with. Now, the good part is volumes came in line, I said, at around 7.5 million tons, but more amount of sales were there in East India. East India delivered, in fact, double-digit volume growth, which was good for volumes, but not so good for profitability. I'll tell you why in just a bit. The cost then, if you're looking at it, the cost of raw materials on a year-on-year basis, that was up by close to around 19%. That's on a per ton basis. And that told you that the cost of slag, the cost of fly ash as well did move higher. And maybe the clinker purchases as well did hurt them. Now, when you're talking about volumes being flattish, on a sequential basis, but you're seeing cost of both power and fuel costs, freight costs as well on a sequential basis are up by nearly around 3% when the market was working with costs cooling down. So that's clearly what disappointed the street. And if you're looking at the East India sales, why was that a disappointment? I was saying because the volumes grew by double digits, but prices weren't as much out there. And also, the lead costs are very, very high out there. But brokerages, they say, let's give them another chance. CLSA, they have a buy rating. Target price of around 2,000 rupees. They said, forget the quarter, let's move on. Morgan Stanley, they say that, in fact, the realizations are higher by 3 to 4% in comparison to March. So they're expecting margins to improve going ahead. Deutsche Bank as well believes there were some one-offs in the past quarter. So going ahead, they believe, in fact, the stock should do well. 1,830 rupees out there. And Citi as well is making it clear, buy on any kind of dips. That's why they are positive on the stock. Though Kotak and HSBC, both of them fairly cautious. Kotak, in fact, has a sell rating on the stock with a target price of around 1,400 rupees odd.
All right, Nigel, that's about ACC, low by about 5%. And that is rubbing off on all the other cement stocks as well. We have the likes of Ambuja not doing too well, Ramco Cements as well, Sri Cement. All of them should come up for you. They are lower in trade. But Nigel, Ultratech, the big daddy.
The big daddy comes out with its set of numbers at around 2 p.m. today. And you can look at the stock price and say the street is giving it a chance. Maybe the problems were ACC specific. That's why the stock is more or less flattish. Right. And maybe if Ultratech goes ahead and surprises, the street will be excited. Otherwise, if it's a disappointment, there'll be an ultra, bad lunch for the bulls, and the bears will have quite a bit of a feast. In terms of expectations, the stock has already seen a run of close to around 20%. Now, top line, we're expecting it to grow by close to around 14%. Majority of that will be because of volumes. Volume number you're looking at is around 20.8 million tons. This includes a few factors. That is the ramping up of the JP Cements assets. And besides that, the street is working that Binani Cements, that's a newly acquired asset, that should be roughly around 700,000 to around 800,000 in terms of sales. So keep an eye out on that front. Stripped of Binani, it should be closer towards 20 million tons. Margins, well, it'll improve, But the expectation itself is not that it will improve by that much. I'll tell you why. One is operating leverage plays out, so that's positive. Input costs should come down, at least for UltraTech Cements. We'll keep an eye out on that front. But Binani helps on the top line, though in terms of margins, it'll be a little bit margin dilutive as well as EPS dilutive. Net profit number, the least important number, that in fact we are working with, is around 780 crores because you're tracking more the operational performance. Commentary on pricing, is the sustainability of this pricing there? And what's happening with the acquired assets? How is Binani Cement shaping up? JP Associates, now the EBITDA per ton is almost on par with UltraTech Cement. And also, what's the timelines in terms of Century Textiles bringing that cement division into its fold? That's what we're going to be tracking. And the big trigger for UltraTech Cement, since it trades at premium valuations, is can they bring their debt down? Any sort of, broad timeline on that? That as well, the street will take it positively.
All right, Nigel, thanks a lot for that. We'll definitely keep an eye out on the cement pack as a whole. Just before we slip into a short break, pull up L&T. The last bit of an uptake that has come in on the Nifty is primarily on account of L&T. That stock surged mostly in just the last 15 minutes. Currently at the high point of the day, there was a brokerage note on L&T coming in from Credit Suisse this morning, maintaining their outperform rating on the stock. And a part of that is witnessed in just the last 15 odd minutes. With that